Well, hello everyone. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today? And what does it tell us about the coming days? We do a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. Available there under the channel L.A. Little. You can subscribe anytime content is pushed. You'll be notified, which makes it nice and easy to stay up with what we're doing here. And we also do a weekly show every Sunday night. You might want to join in on that one. That particular show is a little bit broader perspective. We'll look at it a little bit longer term. So if you're not trading day to day, that's a good way to kind of catch up with what's happening on a weekly basis. As far as these markets today, let's take a look at what we got here. And so what we got is composite up, NDX up, industrials. Actually, they were all up. The Russell actually has given us a bad quote again. That baby was up today, wasn't down. So if we look around at these indexes and numbers, the Russell actually was up just slightly today, 0.8%. Nothing major sideways, and as we'll see as we get into the charts themselves, they were inside days. They don't really tell you anything on the inside date hardly. Well, the one thing that was interesting today was the dollar, and the dollar pushes up again. And to me, this is the biggest risk in this market right now, and that is if I look at this dollar and look at how it's pushing higher, it's concerning. It's concerning because as this pushes up, it does a number of things, but it makes the market less attractive, basically. And it's starting to get to that point now where it's either going to have to come back in pretty soon, or it really is going to push higher. The other thing that's interesting is the bonds, and you kind of got divergence here where one's doing one thing, one's doing the other. We'll look at both of those charts here in a few minutes. So let's pop over and look at the S&P to start with, though, and see what's happening there. And as I was saying there, we really had inside days. Volume shrinks. You're inside the big bar from yesterday. Yesterday tested back in, as we talked about last night, tested back into the retest regenerate zone on the S&P 500. So you take that breakout, you test back into it. Now you're testing back into it a second time. If you test into it multiple times, the odds increase that it will break. Right now, the odds, because it was a bullish breakout confirmed, the odds are still, favorable. They're 62%, I believe, that it will bounce, right? And so, the scenario here, if you take all the odds and the scenarios that you have trend up, right? You have the retest regenerate zone going on here. That favors a bounce, and that's kind of what it's going to try to do. And then you've also got unfulfilled structures on the way up with the ABCD targets as well as range targets. So there's a lot happening here that says, this thing's going to try to push higher. Tomorrow you got the employment number. Today you had the ECB. ECB basically, with no real surprises there today. They just kind of reiterated what they were going to do. They're going to start buying the bonds on Monday. It's something like 60 billion per month, open-ended, although they expect it to run for about a year and a half, and so forth, right? All the things that you would expect. They talked about Greece some. They also raised forecast in terms of what they expect in terms of GDPs and growth. So, Europe doing what Europe wants to do, and that is, today Europe rallied in front of Draghi, and as a result of Draghi, and they're back at their highs. So Europe at the highs, Asia, you got a downplay, and China taking place. Now China had ran up so much last year; it's a whole different story there. But if you look at overseas, it's a little bit of dichotomy. I suspect China's probably going to go higher before it goes all that much lower. And so, overseas markets in general are doing well as the dollar is strong and as those various markets have a central bank intervention, and that's what the Chinese bank was talking about today as well. Let's look at the other indexes right quick. You know, they're all going to show, not all of them, but oh, well, two of them, I believe. Let me see what the Russell did. Yeah, actually the Russell was up. So really just the S&P was inside day. So the IXIC, the Russell, the NDX, they all pop up a little bit, trying to push back up to the top side. That is a positive, although, you know, I wouldn't really read much into that because tomorrow's the employment number. The S&P didn't really show us anything. You're in just a range up here. You're in the range here, you're in the range elsewhere. Now, remember, on the NASDAQ in particular, you know, this was an uninterrupted run that went past the extension, right? The extension was up to here. It climbed on up higher, comes back now to that extension area, test into it, and now it's back up here to try to test a high. That high also happens to be the grand 5,000 number, right? If you get enough push through 5,000, the 50, I think it's like 5,400 is up here, or 52, whatever the number is at the highs, it's not all that far away. And if this thing does get the push and does get the move, you know, now you've set up ABCD structures again nested, and you still have range numbers that project a little bit higher. In this case, you have this ABCD, and believe me, if that one takes hold and starts to run, that's another big one. And so we'll just have to see if it does that or not. It's hard to believe it would do it this fast, but then I've seen stranger things in the market. So, you know, one of the things here, let me back up a second, because you know, there's always, you know, I look at Market Watch, Reuters, all these places, right? And there's always, especially on Market Watch, there's always so much negativity. You know, this market's been up for 6 years. It's a long way in what is a reasonably short period of time, right? In terms of the numbers, how far it's come. That casts seeds of doubt, and that makes sense, right? I mean, you should be doubtful. But at the same time, until the market tells you it's going to roll over, right? Until that structure appears, you just have to believe it's going to try to go higher. You can't just assume it's going to go lower. And right now, you know, when I look at this market, I don't see anything to tell me it's failed. You know, one of the things you learn as a trader is you don't give up on it until it tells you to, right? And right now, it hasn't finished off what it was attempting to do. And even if we do the range trade breakout here, which is really what's in effect on this one, right? You project that forward, it's up off your chart. So it's not as if anything wrong has happened. And until something changes that, you just have to assume it's going to find a way to walk higher, and you have to trade with that mindset. We'll be right back. Look at some sectors, the ox markets, take some viewer questions, and then give you a final wrap.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
Okay, welcome back. You know, one of the things that we saw today and have seen for a while now, you know, Apple, huge percentage of the NDX, carries the NDX most of the time and the market in general. Apple had an ABCD structure, right? It finished off that ABCD structure, then it put another one in place, and then it finished that one off. And so Apple's done what it wanted to do, right? And at this point, Apple's pulling back. That's all fine and dandy, and it's coming back into an area, here, and another one back here, which is the retest regen, and it's doing, what it should do. And a lot of people were worried about Apple. There was news today about Apple and the not going to be able to do their large screen iPads and so forth. And when Apple's down 1.6%, that's a tug on the NDX. It makes it hard to go up. But Apple's not the whole NDX, and it seems like when Apple takes a break, you seem to find other ways to go up, and in particular today it was the IBB. Now the IBB has another scenario going on that's kind of like Apple's, and that is that this thing has pulled up, right? Did an ABCD structure up, finished it as it broke out here, right? It also has, from this price point, another nested ABCD structure that's in play and has broken out tonight, right? That ABCD structure is in play now and pushing, and it has quite a ways to go. This also is a decent weighting. Big news here today had to do with PCYC being over or taken out. It was actually there was a subscriber that asked about this. Let me pull over a daily chart. Ask about it, pharmaceuticals, and it was, I think it was on this bar, if I remember right. It was right back here. He was wondering if it had more room to run. I told him I thought so, and I don't remember exactly what the projections were, but it did. And then today it got the buyout offer and just spiked up to 255, and we were talking about it. It was either this bar or that one. I don't remember which one. But that was a lot cheaper than it is now. They don't always work that way, but sometimes they do. And the chart setup was good, and I have talked to him since, and luckily he stayed in it. But this was the mover today. It just hung and hung and hung, and now it takes off. If you look elsewhere, that was really the story today in terms of the NDX and what was keeping it up. Because if you look at the broad tech, didn't do anything. That's the XLK. You actually had the SOX. Well, let me grab the SOX first. Let me go over here. You had the SOX just kind of hanging, really couldn't get going. It was down early and then bounced back. But really there was not much in tech outside of some speculative, some internet plays were moving today, and the biotech, as I showed you. If we look elsewhere, right, we don't have a lot else going on, but there's no negatives either, real negatives. Here's the XLB, right, just fading back in. XLE can't get going even though oil is holding up, and it's actually interesting because ExxonMobil is coming after the lows at this point. Let me grab a chart of it. This one is coming down to grab these lows, and it's not very far away, and it looks to me like it is going to test them. And there's not much up underneath there if this thing breaks. If I pull up, let's see if I have a weekly chart on it. And I don't have one handy. So anyway, this is struggling. It looks like it's going to continue to struggle. If we move on down the list here, XLF actually acted okay today. The banks had their stress test. They all passed. This one is consolidating. Looks like it wants to try to push higher. XLP, same thing. Looks like it wants to test the highs. The XLV popped up on the IBB, kind of settled back down. It's consolidating still. And XLY is just totally extended, but doesn't want to come in. So, when I look at sectors, I don't see bad things. I don't see any violations. The retest regenerates on the bullish side. I don't see anything other than, the utilities is the only thing you can find that's really doing a negative, right? This is the only thing going the other way right now. So when I look at sectors, I look at the general market, it doesn't look too bad to me. And you got that big number tomorrow that, everybody, keeps looking at. If that comes in soft or as expected, I expect these markets are going to try to rally on that news. Moving over to the ox markets and the currencies, here's the FXE, big spike. Well, first there was a big spike down, consolidation. Now you're spiking down again. Today was a doji off of Draghi. I suspect this thing's going to build out a large range here, and I suspect that if it does, that this dollar is going to do the same, even though the dollar spiked up and made a doji as well, doji high. Dollar's going to come back in, do a retest, regen, and then we're going to find out whether it's really going to move or not. And that's going to be a big piece for us to watch going forward, because if it does start to spike up, and if the dollar does really begin to make its move, then we're going to probably feel the effects of that in the equity markets. Looking at the bonds right quick, so bonds are coming in for this low. They really have no volume, and the bonds actually look like they're going to try to bounce. They don't look like they're ready to give it up yet. Now, that's the way it looks. I mean, we certainly could get volume escalation tomorrow, and they haven't tested that low yet, so it does look like it's going to try to test it still. But right now, you know, the odds seem to suggest that it's going to hold on. If the bonds hold, then that says we're going to get a weaker employment number than we expect, or at least one that's in line versus one that's strong and sends the dollar up higher. So that tomorrow, you know, it kind of looks to me like bonds are going to try to hold, which also seems to suggest that dollar is going to try to fade back in, and that should be good for equities if in fact that happens that way. Okay, let's take some viewer questions here. So one of the questions that came in today has to do with the S&P 500, and it was actually in the teach and trade room where, you know, I took off a little bit early today to deal with some other things. And the question had to do with the S&P 500 on a 60-minute bar chart, and they were looking at swing point lows and so forth and saying, you know, doesn't this chart look negative versus positive? And in fact, the comment was, may I play devil's advocate and request a look at the SPX hourly chart with two unfulfilled downside gaps and an ABCD down pattern that still seems to be in force. And so he was asking, you know, what do you think about this? How can you be bullish on this market with this particular scenario? Let's identify what he's talking about. There's a gap here and a gap there, even though it doesn't really show on these charts, on this particular charting system. If we look at the retest regen zone, you know, you don't have 6 bars here, so this low isn't a broken swing point low on the 60-minute. It's this bar here, so the retest regenerate is here. And so, yes, it came back in to test here on the break, but you actually, this is the second time up, right? Because you actually had the break back here, did a retest, you got above it, couldn't really, well, actually it held for a bar, even though it was weak, and then you had the breakdown. So that's the retest regenerate zone. You know, at best, it's the second attempt to get into it. At worst, you know, it kind of go over it and already once. That doesn't nullify it, so to speak, because it's still a zone to look at on the way back. But, you know, there is a zone there, and yeah, it's there, and it's having an effect, as you saw right here, as you push up into it. I think the zone, you know, when I look at it from this perspective, I don't pay as much attention to that zone as I do this one, and that's the overlap of these two wide price spread bars. This is the key area on this chart right now on this time frame. So on a 60-minute time frame, I would be focused on this, because, you know, if you get back up here, that tells you something, right? If you can get over and stay over this bar's top, that tells you something. And so far, you know, it's got fearful as soon as it got up to that area and got turned right back around. So to me, that's the bar I would be looking at. And then going back to the other question, the ABCD structure, you know, your ABCD structure, in my opinion, is here, right? And it's already finished. This is done. I mean, you've already had the ABCD structure. If anything, you have an ABCD structure trying to form this direction, right, which would take it back to these highs. That's the one that looks to be in effect right now, and that's the one that I would be watching. So it looks to me like tomorrow, for whatever reason, it's going to try to come up here and test this area, and that's going to be the key test tomorrow around 2108. You get over that, right, then you can push right back to the tops. And so that's kind of the key area tomorrow. if that number comes out in such a way that they do buy this thing and they push it up here, this will be the spot they fight in terms of who's selling and who's buying. So that's the way I would dissect that chart when I'm looking at it. Okay, let's do, I don't have enough time for the other couple of questions that are here, so I'll take those tomorrow. Let's do our final thoughts. One of the things that's hard to fathom, and you know, I was trading these markets back when it happened, and I remember I used to look at what was happening, you know, and Yahoo would go up $50 a day, and AOL was doing $75 a day, and you know, it was kind of crazy times back then. And I'm talking about, you know, the NASDAQ composite. I've got it on a yearly going back to 78, it looks like. This run here was pretty much uninterrupted, right? And if you just look at the numbers, they're amazing when you look back. That was from 750 to 5,000 plus, right? And it did it from, you know, was about 94 if I remember right. Looks like about 94 up to 2000. So over a 6-year period, you went from 750 to 5,000 plus. That is a huge run. We think this run we're on now is huge, and you know, it's not small, but I mean, this one in magnitudes, you know, we got another, you know, 2,000 to go up here to get the same sort of a magnitude that we got back then. So one thing I would say, you know, to the naysayers is, you know, there's nothing that says this market can't keep going, folks. I mean, this run was unbelievably strong and continued for a long time, and you know, who knows how far this one's going to go before it comes back. The key is you don't want to be in there when it comes back, because that 5,000, it was 5132, so actually it's not as high as I thought it was. 5132, if you go back to where it came back to, came all the way back to 2000. So you lost 3,000 out of 5. And that's the kind of damage that can be done after these huge runs. So, you know, when you hear me talk about don't worry about a crash until it's time, you know, I say that with all seriousness, and you know, I have a service built around that ideal, but you have to constantly monitor, because that structure can appear at any point, and you just, you know, you've got to look at it, you got to be ready for it, you got to know what you're going to do if it happens, and you got to know when to do it, because you know, I could have pulled out of this market anywhere over the last 3 years, which I've tried not to do, and I've pretty much kept my members in it, but it hasn't been easy. You know, there's been places in here where you did want to get out, but this market, you know, the reason I brought this up is we're coming back up on the highs, 51.32, and we're not that far away, 150 points, right? It's nothing. That can be done in a week. So just think about it. It's like, what is going to keep this market from coming up here and testing that top? You know, you've made this huge run. Do you think you're not going to go test that top? I don't think so. I mean, it's just not the way the markets work. Before we know it, we'll be up there and we'll be testing it. And I suspect we're going to do it on this leg up. That's what the show is about tonight. I'll leave you with those thoughts. And I suspect somehow, some way, they're going to try to push this thing higher. It just setting up that way from my viewpoint. Consolidation this week. You worked off the overbought conditions by moving sideways versus down, a little bit down, but mostly sideways. And you're set up pretty good to move higher. You just need some catalyst, right? Something to hang your hat on and to start pushing again. Have a great one, folks. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and it was your daily NeoTA wrap. Have a great night, and I'll see you on Sunday. Good night.